We're going to do an account update today, and I'm going to take a look at each one of my positions and where we are at, because why not? If you're following this channel, you probably want to know how I'm doing overall. All right. So first of all, we're going to get into Mara. On each one of these tickers, I have a line of where my current position price is. Now, on some of these, I have scaled in and scaled out. So it's not necessarily where I originally got in, but nonetheless, some of it is going to be pretty close. So first of all, we got Mara. It's Marathon Holdings, which is a crypto mining company. My average price is $9.12. It's currently at $15.12. So we are up 30% on Mara, which is great. Mara has a ton of volatility, so there's a ton of opportunity there. So why did I get into Mara when I did? Well, you can see that if we zoom in right here, and this one I didn't scale into, so you can actually see that my dollar cost average was exactly where the blue 7-period moving average crossed above the 25-period exponential moving average, and we were above the zero line on the Trendillo oscillator right here. I do keep the Trendillo oscillator on logarithmic because I just want to see how it's doing above and below that zero line. And then we also crossed at the same time, we crossed above the zero line on the MACD. And so that's where, that's bullish if you do that, if the oscillator does that. So the only thing that was really giving me a sign of maybe we wanted to wait is that this line right here, this HA market bias indicator, was still red. However, there was a strong support, and you can even draw a trend line kind of like that, right? So I thought it was safe to get in. And of course, when you zoom out and slide it over, it's all about risk to reward, right? And there is a lot higher reward than there is to risk right here. I also like how Mara has not really had too much issues or red flags as far as the bear market with crypto, and that's exactly what you want to look for in a bear market. Who is strong, who's doing okay, and then who is struggling or going under, because the bear market is going to get rid of, it's going to trim the fat, basically, okay? It's the easiest way to put it, trim the fat. We're going to go to BKKT, which is another crypto holding company. Now, this is one that I am currently down 7.14%, which is to be expected, because I'm holding this maybe not back up to 50 bucks a share, but I am holding it because it has a huge amount of upside versus downside. I can put a decent amount of cash in to where if it goes to zero, there's not really anything. I didn't lose too much, but if it goes up, I mean, even 100%, that would be great, right? But up to previous highs would basically 50x my money. So I figure it's worth the risk to reward ratio. We can get rid of the auto for a second, because while we do have a trend line slightly going down, right, there is a support here. And on top of that, if we zoom in, we had all of our signals, according to our setup, give a bullish signal, and that's why I went in. And a lot of times when you first get that bullish signal, it's going to come back down and retest that market bias indicator before it goes back up. But we have a green market bias indicator now, and it is the first time we actually have it since we got that around that $50 mark. Last time it went up. There we go. I'm just going to fix it for you. Last time we went up all the way to 50, came back down to 13. So even if we just get back to where it was before, when we had the green on the market bias indicator, that would 13x my money, which is pretty insane, right? So we're going to turn the auto back on. So we have good support, and we have all bullish signals right now. We're above the zero line in both the market bias indicator, excuse me, both on the Trendillo and the MACD. Now, that's not the end-all be-all, right? But that is very significant, very important. And then we have the blue line. If you zoom in here, blue line above the yellow line, which is bullish. And we are green, once again, mentioning on the market bias indicator. So While I'm down 7% on that, that was to be completely expected, and I am not selling out of that. I'm going to ride this for quite a while, as long as it takes. I'm not worried about that one. And I have such a small percentage in that it's not going to affect my account if I lose it. But if I get back to the previous highs and I 50x my money, I might be buying a house off of it. So next we've got Snapchat. So I'll tell you exactly why I got into Snapchat. For one, while I wouldn't say it's a blue chip by any means, it is an established company. It has a huge track record as far as the stock, or as far as the ticker, I should say. And we have a pretty important support line right here. And again, that is why, big reason why I got back in, or I got into it. So Snapchat, I am up 32% currently right now. My cost average, my dollar cost average is $12.13. It is up to $16.11. So I'm going to ride this. I don't want to ride it necessarily all the way to previous highs, because I don't know if this ever will get back to previous highs. But I do know there is a ton of upside as far as risk to reward. There is a huge support. Once again, there's a huge support right here. We turned green on the market bias indicator, which is very important. And we're going to be riding this basically probably until the technicals are starting to tell me that it's bearish, and then I'll scale out of it, or maybe just fully close my position. Now, we're going to get to the most juicy one in a little bit, but I'm first just going to go to the S&P 500. Now, this one, it was not really my traditional reasoning for getting in. I got in right off of this dead cat bounce. I knew it was about a 50-50 shot of whether or not it was a dead cat bounce or if it was just a temporary breather. But the state of the market that we were in, I was patiently waiting all along here. I did not want to get into a lot of those big stocks like Nvidia, Apple, Microsoft that were just soaring because it was so overbought. But I wanted to have a little bit in the market, right? So I figured I'll get in right here. If it goes down, fine. It's the S&P 500. I'll ride it out. Maybe I'll DCA in as the technicals actually tell me to do so. If it goes up from here and it was just a little bit of a breather, great, I'm in the green, right? So I waited, and then I got down to the HA market price indicator. Now, in retrospect, off of this bounce right here, if we zoom in, it was below the market price indicator, but this still is a bounce. So it bounced up. In retrospect, I probably could have scaled into there, which is what I did largely with TQQQ. Now, my dollar cost average right now for TQQQ is 37.26. It is at 47.52. It is up 26.59%. Now, while it isn't as significant as a percentage gains as Mara, which is up 64% currently right now for me, obviously the market's open, so things are changing as we go. It is my biggest position. I thought that TQQQ is a little bit of a safer bet than Marathon Holdings. While I have faith in Marathon Holdings, it's just a higher risk. So I put most of what I have into the market in TQQQ. We are up, again, 27%, which I am very happy about. And our strategy with TQQQ is to ride it to the next highs. Now, if it's starting to show bearish signs, I have enough shares to where I can scale out but still have skin in the game, which I may or may not do. It just depends on exactly what we're looking at and with the macroeconomic trends, right? It's very important to adjust as you go along. You don't have to completely stick to something, but there is a fine line between abandoning your plan and adjusting and adapting, right? So we are shooting, we're hoping to get back to 87.59 or even, was it like 92.44, which is previous highs. If this goes down, I'm definitely scaling in again though. So I think in a previous video, I mean, we showed that it would be 400% increase. It would be a 4x if you went, if TQQQ went all the way back down to this previous low right here, which would most likely be a support for a couple of reasons. If you look at QQQ and at the S&P 500, this right here is COVID, and while on TQQQ it was lower than this COVID high, on the S&P 500 and TQQQ, this actually acts as a support for these lows. So I would definitely venture to guess that if we get back down here, there's at least going to be some consolidation and probably an increase. So that would be a great opportunity to scale in, and actually I would be very excited about it. So for TQQQ, it's a win-win for me. Either I'm going to scale in or I'm going to get to the point where I can take profits. And that is how I have it set up for most of these trades. I have a low risk to reward ratio based on where they're at. They're so beat down. And on other ones, I have ones where I'm confident that the market is going to return, and I waited patiently to get in. And that is how you hedge your bets in trading. If you like this content and want to see more, just hit the like button, please. It is the easiest way to help out the channel. If you want to see more of the content, just hit the subscription bell and turn on the notifications so you can see all of my latest content. But I'm going to get this video out. I'm just a guy on YouTube, just like every other stock channel out there. So do your own due diligence, but we're doing great things here on this channel, and we'll see you next time. Thank you.